Solana ETF in US, BTC wallet moves after 14 years and Logan Paul's lawsuit. Applications for Solana ETFs have been filed in the US, presumably in anticipation of a regulatory change that would favor cryptocurrencies. While YouTuber Logan Paul sued CoffeeZilla for critical reporting on his unsuccessful CryptoZoo NFT project, a dormant 2010 Bitcoin wallet unexpectedly reactivated and transferring $3 million worth of early mined BTC. These incidents bring to light concerns about influencer accountability, the importance of early Bitcoin, and ongoing regulatory battles in the cryptocurrency space. We will go into great detail about each event separately today. Number 5. VanEck and 21 Shares seek to capitalize on Solana's growth. The announcement of Solana ETFs by VanEck and 21 Shares in the US coincides with the Solana blockchain's rapid ascent to prominence in the cryptocurrency world. With quicker transaction times and cheaper fees than Ethereum, Solana has established itself as a competitive alternative, drawing in a growing user base and decentralized application DApp ecosystem. The goal of the asset managers attempting to introduce Solana ETFs is to take advantage of the growing interest from investors in the Solana network and offer a more approachable investment option for individuals who want exposure to the Solana ecosystem. Number 4. Betting on a shift in SEC leadership. It appears from the timing of these Solana ETF filings that the asset managers are placing a calculated wager on former President Donald Trump's chances of winning the presidency again in 2024. The SEC has taken a cautious stance toward cryptocurrency-based investment products under the current Biden administration, consistently turning down proposals for exchange-traded funds ETFs that are tied to cryptocurrencies other than Bitcoin. But if Trump were to win the next election, he would probably pick a candidate who is friendlier to the cryptocurrency industry to succeed Gary Gensler, the current chair of the SEC. The approval of Solana ETFs may be facilitated by this change in leadership because it is anticipated that the SEC will take a more accommodative view of these financial products. Number 3. Providing easier access to the Solana ecosystem. The successful launch of a Solana ETF would offer investors a more convenient and regulated way to gain exposure to the Solana ecosystem compared to the current Grayscale Solana Trust option. This has the potential to attract a wider range of investors, including those who may be hesitant to take on the challenges associated with making direct cryptocurrency investments. By offering a Solana ETF, the asset managers hope to make it easier for institutional and retail investors to support initiatives related to the growth of the Solana network, which could increase adoption and liquidity. Number 2. Legal hurdles and the SEC's regulatory criteria. Legal experts have expressed skepticism about the possibility of Solana ETFs receiving SEC approval despite the optimism of the asset managers. The regulator has previously ruled that Solana is a security, and one major barrier may be the absence of a regulated cryptocurrency futures market. Before approving ETFs associated with a specific asset, the SEC has historically demanded the existence of a regulated futures market because it offers the level of price discovery and market supervision that the regulator considers essential. Number 1. Challenging the SEC's approach. The asset managers counter that eligibility for ETFs shouldn't be determined only by the existence of futures contracts. They argue that even in the lack of a regulated futures market, a large number of cryptocurrencies, including Solana, should be eligible underlyings for exchange-traded funds ETFs. The industry's push for a more liberal and accommodating regulatory framework for investment products based on cryptocurrencies is reflected in this position, as the decentralized nature of cryptocurrencies may not be entirely compatible with the established financial system. The goal of the asset managers is to circumvent the SEC's requirements and open the door for a wider variety of cryptocurrency-based ETFs. Now we will highlight the second event, number 5. Dormant Bitcoin wallet reactivated after 14 years. A Bitcoin wallet that had not been used since July 14, 2010 unexpectedly came back online and sent 50 BTC, or roughly $3.05 million, to the Binance cryptocurrency exchange. When Bitcoin was worth less than $1 more than 14 years ago, this wallet first received the 50 BTC mining reward. The enormous increase in value of these early mined Bitcoins was highlighted by the fact that by the time the wallet transferred the money, the price of Bitcoin was approximately $61,000. Number 4. The significance of Satoshi-era Bitcoins. Unexpectedly, on July 14, 2010, a Bitcoin wallet that had not been used since then returned online and sent 50 BTC, or about $3.05 million, to the Binance cryptocurrency exchange. This wallet was the first to receive the 50 BTC mining reward when Bitcoin was worth less than $1 over 14 years ago. The fact that the price of Bitcoin had increased to about $61,000 by the time the wallet transferred the funds demonstrated the huge increase in value of these early mined Bitcoins. Number 3. Previous instances of dormant wallet reactivation. Dormant Bitcoin wallets from the Satoshi era have reappeared previously. Previously, wallets holding several hundred or thousands of Bitcoins were also revived after going into dormancy for more than 10 years. These occurrences frequently spark a lot of discussion and conjecture in the Bitcoin community because they shed light on the motivations and actions of early adopters of the cryptocurrency. Number 2. Potential motivations behind the wallet movement. The reactivation of previously inactive Bitcoin wallets may be a sign that the owners intend to sell their holdings or transfer the money for additional trading. But sometimes it's unclear why these movements are happening. A number of reasons could motivate the 14-year-old wallet to be reactivated, including the need to cash out, reinvest in other cryptocurrency assets, or simply transfer the money to a new wallet for private use. Number 1. Continued interest in early mined Bitcoins. Even though the larger cryptocurrency market has recently encountered difficulties, the reactivation of this 14-year-old Bitcoin wallet and the transfer of 50 BTC to Binance demonstrate the value and ongoing interest in early mined Bitcoins. Because of their rarity and the historical significance of their mining, which took place in the early stages of the Bitcoin network's development, these Satoshi-era Bitcoins are valued highly. The fact that these idle wallets are starting to surface again is a testament to the durability and promise of the first cryptocurrency. And at last, we will highlight the third event. Number 5. Lawsuit filed over CryptoZoo NFT project coverage. A defamation lawsuit has been filed by well-known YouTuber Logan Paul against Stephen "CoffeeZilla" Findyson. The lawsuit is a direct reaction to Paul's involvement with the CryptoZoo non-fungible token NFT project, which was the subject of extensive investigative coverage by CoffeeZilla. CoffeeZilla investigated the CryptoZoo project in depth over the course of a multi-part video series, raising grave concerns about both the project's validity and Paul's involvement in pushing it to his millions of fans. Paul has filed a lawsuit against CoffeeZilla because he believes the YouTuber's reporting has harmed his reputation and cost him money. Number 4. CoffeeZilla's accusations of fraud. CoffeeZilla made a number of harsh allegations regarding the CryptoZoo NFT project during his extensive investigation. According to him, the project's roadmap was never completed, the anticipated game was never released, and the value of the CryptoZoo NFTs crashed, severely hurting the finances of numerous investors. CoffeeZilla even went so far as to call the initiative a scam for not living up to investor expectations. The main focus of Logan Paul's defamation lawsuit against the YouTuber is these grave accusations. Number 3. Logan Paul's defamation lawsuit. Logan Paul has sued CoffeeZilla for defamation as a result of the YouTuber's harsh coverage. Paul disputes CoffeeZilla's assertions that there was fraud involved in the CryptoZoo project. Rather, Paul contends that the project's developer and advisor, neither of whom is mentioned in the lawsuit, should bear the responsibility for the project's shortcomings. Paul says he decided to file a lawsuit because he believes CoffeeZilla's reporting has unfairly harmed his reputation and cost him money. Number 2. CoffeeZilla stands by reporting. CoffeeZilla has made it clear that he stands by the reporting and evidence from his CryptoZoo investigation, even in the face of possible legal action. He says the data from his in-depth investigation validates the things he said in his videos regarding Logan Paul's involvement and the project's shortcomings. CoffeeZilla, who feels that his coverage of the CryptoZoo saga has been fair and accurate, has pledged to fight the defamation lawsuit and carry on with his reporting. Number 1. Ongoing controversy and fallout. Logan Paul's lawsuit is the most recent chapter in the controversy that has been raging over his involvement with the CryptoZoo NFT project. The cryptocurrency community has been very critical of the project and has accused Paul of pushing a rug-pull scheme to his millions of followers. The legal action has intensified the discourse surrounding influencer accountability and the obligation of those who advocate for cryptocurrency projects to their viewers. The aftermath from the Cryptozoic fiasco is still being felt in the cryptocurrency and online creator communities as the legal dispute plays out. These were the topics of our today's video. If you have any suggestions regarding them, please write in the comment box and subscribe to our YouTube channel.